Hello, you are watching InstaForex News. Today our news will be devoted to Greece. For the first time over several months, the dynamics of gold prices corresponds to the information written in textbooks. The gold prices increase at a lowering inclination to risks. The prices for the gold on spot market are around two-week highs of 1,165 USD per ounce, with no respect to the overall negative dynamics on the financial markets, while the prices on other raw commodities decrease. The US dollar is strengthening. If the gold has become popular as a shelter asset again, this is only connected with the situation on the currency market, but not with some mysterious forces. The status of gold as a shelter asset starts to overweight its role in the currency market risk hedging, when the lasting worries about the sovereign debt is rather facilitating gold purchases as a shelter asset than its sales in the context of the situation on the market. Thus, the increasing suspense about the sovereign debt can appear favorable for the gold market. By far, the alarms about the sovereign debt of the Eurozone countries significantly have suppressed the growth of gold prices. Over several months, the prices for gold has been increasing and descending along with the investors' tendency to risk. Such trend encouraged the stabilization of the US government bond market, which supported the US dollar and caused the decline of the gold prices. But everything changed on Tuesday when the sovereign credit rating of Greece, which is the closest to default, was reduced by the Standard Poor's agency. Lowering the ratings of Portugal and Greece fueled the fears that analogical perspectives can be awaited by other Eurozone countries. A few experts assume that the gold has become not so exposed to risk after a large-scale crisis in the global finance system, and the disturbances connected with geopolitical events have started to be short-term and limited by the time of influences. The World Gold Council mentioned that gold refers to those financial assets which do not depend on promise to pay, which makes it possible to hedge default risks. This denotes that when volatility and uncertainty are high, the investors usually transfer funds into qualitative assets, attempting to secure the capital by means of buying the assets the cost of which is better protected. Follow our next releases and goodbye.